Welcome to Forum 360 with a global outlook and a local view. I'm Ardith Keck, your host. Our topic is an important one for everyone. Are you thinking about retirement? Are you planning your years ahead and wondering how you will have enough money? Are you the head of a household with small children? All of you and more of you need to be thinking about your future and planning for financial success. And for that unplanned event that could happen, with me to talk about financial planning is Ted Sadar, certified financial planner with advisory services offered through Cetera Advisors, LLC, a broker-dealer and registered investment advisor. Ted, welcome. And can you explain what a financial planner does?
Well, thank you so much for the opportunity to be here today, Ardith. I appreciate it. And when you think about financial planning, it's more of an understanding of the long term, how you would work with your money. And for a lot of folks, they think it's all about investments, but it's more than that, because really what it encompasses is maybe risk development from an insurance point of view, possibly entering into estate planning to make sure things go smoothly. So it's an outlook on how you handle your financial things.
And do you have to have a certain kind of education?
Well, you don't have to in the industry, although it's always recommended that you look for someone that has some accredited educational designation. The CFP is one of those designations that's looked upon as a gold standard in the industry with which to work with someone that's professional.
How long does it take you to be a CFP?
Today it's interesting because you can actually start while you're in college to start to take some of those courses. Akron U is one of those institutions that helps with that. Then after you take a certain amount of coursework, then you sit for a test or a series of tests depending on how much you've completed so far.
So it can vary.
It can vary, right.
Okay. If someone is looking for a financial planner, what should they do?
I think the first thing is that to understand that most people think they don't look for a financial planner because they don't have enough money saved. Remember, money is a very sensitive topic, and most people are somewhat insecure if they haven't saved a lot to talk to someone. But really what they should do is understand that the value that a financial planner can add is to help guide you along your way, possibly to get out of debt, possibly to look at your cash flow, to make some good decisions in other areas that may not be a matter of how much you've put away already for retirement or some other special occasion, college education, things of that nature.
Well, suppose somebody wants to hire a financial planner or go to see a financial planner. Should they worry about how this financial planner gets paid?
Well, they should be aware, certainly. I mean, it could be on a project basis, so it's not predicated on how much money you have. It's based on how much time it might take to help you with what questions that you might have. But in the beginning, I think what you have to do is get familiar and comfortable with the philosophy that you have, but also what the planner's philosophy is, because that's very important to guide you along the way, because we're a coach. We're there to help guide you along the way. If in the event that you need some, let's say, refresher or something of that nature, then many times people look at it as more of a retainer type thing. So they'd be able to come back, ask questions, feel comfortable to get together with the financial planner without having it be because they have so much invested with the institution.
And with a new client, what's the first thing you do?
Well, we sit down and talk. And that's the most important thing. And usually when we're dealing with a couple, as for instance, you've got two backgrounds that you have to understand. One is, what's their money message? How did they get brought up? What were they thinking around the kitchen table? How were their parents? How successful are they at how they handle what they do? Some people are savers, for instance. Some people are spenders. Usually, as you know, in most households, you'll have a little bit of both. So you have to develop a philosophy, because you can't really give, let's say, good information until you understand what they're looking for. It's kind of like the medical field in many ways. It's kind of like, let's get to know each other, let's find out what your needs are, what are your goals, what you're trying to accomplish, and then see if there's a good fit.
How do you decide what to recommend to a client?
Well, it depends. So young couples, for instance, in the event that they have children and we're looking at maybe risk management, term insurance is usually what we would recommend because it's the lowest cost. And so what happens is you have the biggest need generally at that point in their lives. So that's just one recommendation. If you look at estate planning, maybe a simple will is all they need. But once they start to have children, things change a little bit. Maybe they should look at adding a trust to that, along with healthcare power of attorneys and power of attorneys, things of that nature.
With a new client, does some certain level of income have to be there before thinking, and you touched on this, before going to a financial planner?
No, I think it's really, I grew up as a saver. And so being a saver, it's not how much money you make, it's really how much you're putting away and what your goals are. It really comes down to that. A lot of people have New Year's resolutions, they want to save more money, they want to lose weight, but after about March or April, those things usually kind of drift away.
Yes.
So they don't stay with the plan because they never really bought into a plan. All they did was had an idea. So, it's got to be something that there's an accountability to the process along the way.
If someone is thinking about retirement in the years ahead, do you have suggestions for that person?
Again, it goes back to their background. Some people today still have pensions, but they're much more infrequent in compared to what their parents may have had. So if they modeled things after their parents, where they worked for a big company for 30 years and were able to retire successfully, had Social Security along with a pension, things were a little different. Today, most of the people don't have a pension, so you've got to plan for that on your own. And unfortunately, too many people start too late to look at that, and they don't get the value of compounding and develop those behaviors of saving on a regular basis. So it gets harder and harder. You start to add children, then you start to add college cost or the anticipation of college, and all of a sudden you find out too little too late, and now they're wondering why they have to keep working. Maybe the job won't be there as they thought it would be. They get disrupted. It becomes a very difficult time.
And I know that you have some kind of charts that help people decide when retirement is a good thing.
Well, when I go back when I was young, and maybe if you recall, we used to be able to look at CDs and we were getting 16, 17, 18% back in the 70s. Well, buy a CD, live off of that income, life is pretty good. Today, if you look at a 10-year treasury at 2.4%, you can't live off that. So we have to look at what's a risk profile that they're familiar with. And again, if their parents weren't invested in the market, they may not understand it goes up, it goes down. So the charts help give them a history by looking back. No one can see what the future holds, but you start to put together a risk profile as to what might be appropriate for them.
And given the cost of college, you have suggestions for people with little children.
Well, we have to start with the philosophy again, because some parents want to pay for all of their kids' education and they overpromise. And then they find out what the real cost is and they end up taking out loans and loans and loans because they don't want to go back on what they told their kids. And I always try to help clients understand that whatever you do for one, they're going to be marked with the other children as well. So if there's an age discrepancy between the kids, 2, 3, 4 years, 2, 3, 4 years, all of a sudden now, 6, 8 years later, the cost of college goes up and it becomes overwhelming. As you know, nationally in this country, student debt is the largest single component of debt in this country, larger than all consumer credit cards and larger than all auto loans that are out there right now.
And people are probably going to face that debt even if they have a 529.
Correct.
To save for college.
Yeah, the 529 is a great tool because it allows you to take money, invest the money, and all the growth on the money is not taxed if it's used for an accredited institution. But I also think that sometimes in the past, college has been overemphasized, that it's the answer to everyone's problems. And today, if you look at a skilled program in some type of a trade or an apprenticeship, those are also very good alternatives that should be considered.
I think it might be the time to note that college can be as much as $65,000 a year?
Well, remember that's list price, and that's usually for a private institution. Usually there's awards, there's scholarships, there's different types of programs that are available. So we don't want to necessarily say don't look at those schools. All we have to do is say it depends on what your grades are, depends on what you bring to the table, but also what are your goals, what are you trying to accomplish. So state school could be a very appropriate choice as well. But if you go out of state, obviously there's going to be more expense just to travel back and forth for the parents as well as from the student. Obviously, if they get lonely, coming home becomes a much more expensive process. So you have to know your child, and that's why site visits are very important. So as they go to these institutions, you can look at a large school, you can look at more of a small school. Depends on what you're trying to accomplish there.
Should single people think about a financial planner?
Oh, definitely, because again, they're responsible for everything. So when you look at being single, that doesn't mean you still don't have to have a will. Doesn't mean you still have to have planning in the event that you can't do things. Who's going to take care of things for you? But usually these are things that people don't take care of. It's something that's not required, it's not mandatory, so they have a tendency not to do these things. I mean, most people still pass away today in this country without some kind of an estate plan. And that's why there's probate to help organize and distribute those things, but it may not be in the best way that the parents or the individual may have liked, but that's what the court system will organize for us.
Boy, I have a friend whose husband died without a will, and the state took a huge amount of money.
And time.
Uh-huh.
And so there's a lot of uncertainty. And usually, as you know, based on, again, everyone's got a different background. But today, in most couples, one may be more dominant in handling financial affairs than another. So there's a lack of knowledge, understanding the terms that are used, maybe understanding the forms that are required. So if that person passes away, I mean, just as simple as what are the passwords today is a huge problem in trying to get into accounts and settle things. And so then you don't have that information written down, or you hadn't talked about it, it becomes very difficult for the survivor to take care of things.
Absolutely. With me today, talking about financial planning, is Ted Sadar. And Ted is a certified financial planner with advisory services offered through Cetera Advisors, LLC, a broker-dealer and registered investment advisor. And Ted, is there an ideal client?
Well, when you look at an ideal client, obviously you're looking at someone who's planning oriented and wants to accomplish things, and they know what they want to accomplish. So we sit down and help establish goals. So a lot of times people look and say, okay, what are we trying to accomplish maybe in the next 6 to 12 months? Maybe they look out another, again, 5 to 10 years. So when you're talking about college with young ones, you're talking about maybe looking at older folks that are maybe in their 50s. We should talk about long-term care. We should look at health-related issues. And sometimes those things are brought about because they have to take care of their parents. And sometimes that's the best wake-up call, not just the information, but the activity of having to go through settling in state, as well as maybe handling health-related issues, and long-term care becomes a much better conversation then. And because it's underwritten by health, what most people want to do is they want to get the insurance or the coverage for that problem after they've incurred some kind of a health-related injury or issue, and then all of a sudden becomes more expensive. So planning ahead does make sense.
Be careful here. Do men or women have a better sense of money?
Boy, that's a difficult question. I would say a lot of it is based on personality, not necessarily whether it's male or female. And if you study the personalities and you understand that some people by design are much more detail-oriented, so they're much more conscientious with these types of things. So it's not necessarily a male or a female.
Oh, that was good. Do you find that too many people aren't thinking ahead?
Generally, I would say yes. They're more concerned about what's going on today than they are 5 or 10 years from now. And so these things creep up, and as you know, they don't have time maybe to make plans or to adjust to things as they are. Particularly as you get older, you have to get an understanding that today, if you're in your 50s or in your 60s and the jobs are being disrupted all the time, So having that history with a good company may not last. So that's why you see people changing jobs more frequently today.
Do you find that too many people aren't aware of their financial status?
I think they're afraid, in all fairness, and they're afraid, they're somewhat intimidated by talking to someone about it. It's almost like a doctor relationship. You have to have some kind of a general practitioner. If you need more specialties, then many times, again, if you need an attorney for estate planning, we refer that work out, but we give them an understanding of what to expect. So just like with a doctor, what are your goals? What are you trying to accomplish? You and I both know if you look at the average person and if they're overweight, they don't need a doctor to tell them they're overweight. They already know that. But are they willing to do something about it? And that's where the goal orientation starts. And when do people normally make a change? When something bad happens. So hopefully it's something that they'll plan ahead for. Sometimes it's because circumstances being what they are, finances get in the way and all of a sudden they lose their job, or maybe they have bigger expenses than they anticipated, then all of a sudden they wish they would have saved more when they were younger.
Mm-hmm. Do you make recommendations for ways to invest?
Well, we always talk to people about investing. I think the biggest thing we find is that as people get older, they lose sight of the fact that the average person is living longer. So if the average person today has a good chance of living into their 90s, and they retire sometime in their 60s, that's a 30-year period of time. And we have to outpace inflation, and we have to outpace taxes, or what we find is we're losing that standard of living. So a mix of having something that's going to grow as well as maybe something that stabilizes the portfolio and more of a fixed interest type program is a balance of what you have to work with them on.
Do you watch the investments carefully?
Oh, every day. And so what happens is we don't make adjustments every day. Too many clients, I believe, think that as soon as the market changes, you have to sell something or you have to make a change. And that's not always in their best interest. So I think what you find is you develop a philosophy again. Is this going to be more of a buy and hold, or are you going to be an active trader? And find a planner that can help you based on what you're trying to accomplish.
I've heard you refer to the cookie jar.
Yes.
How do you explain that?
Well, usually what happens is people have a sense of security built around cash. So we establish what that number is. So to give you an example, if someone said they've been saving all their lives and they have $25,000 in cash, I'm okay with that. If you had $150,000 in cash, let's talk. Let's find out what are you trying to accomplish. Should you invest some of that money? Is it something that you're going to need to draw on later? Are you thinking about moving maybe? Are you thinking about maybe buying a car? Those types of things. So those of us that are savers like to save all the time. And so what happens along the way is you have to have a tendency to look at it and say, okay, should I have this invested? Maybe I should put money into an IRA this year to help reduce my taxes, things like that.
So the cookie jar is cash that's easily available.
Readily available, right. Generally, FDIC insured is recommended.
Mm-hmm. For emergencies.
Right.
Or
and you know,
roof leaks.
It's fascinating today because interest rates are low, so banks have a tendency not to pay much in interest. So you have to look at other alternatives that are still banks, but it may not be the homegrown bank that you're used to. So we recommend high-yield savings accounts to folks that are given a higher rate of return than what the banks are now. It's linked to your checking account, so it's a little bit of an electronic transfer. So you have to be comfortable that the client is comfortable with electronics and understanding how to use the internet, things like that. But certainly worthy of their time and effort to do that.
How often do you meet with a client?
It depends on what's best for them, but usually semi-annually would be a good recommendation. I think too many times when clients get together, maybe quarterly, they think we have to change investments. You have to do something to show that you're adding value, and we don't necessarily think that's always the best. So if you look at, for instance, you look at last year, we had a tough quarter in the fourth quarter for a variety of different reasons. Now all of a sudden we're doing well in the first quarter. Should people have sold in the fourth quarter now hurry up and try to rebuy now in the second quarter? It makes it pretty challenging if you're trading all the time. So it depends on, it's a philosophy again, depends on what you're trying to accomplish.
So what is that visit like when people come to you semi-annually, perhaps?
Usually what we do is we have an agenda, and the first thing on that agenda item is what's new for you. We're trying to do an understanding of what's changed or what's the same, what are you looking forward to, again, what are your goals, How are you tracking towards those goals? And I think a lot of times what people are looking for is someone like myself to say it's okay to spend some money, because people are afraid. So they don't know, gee, do I have enough? Will I be able to afford retirement? So they need a little bit of guidance along the way to say it's okay if you go on vacation, or allow them to spend money on maybe something else they're looking forward to.
Sounds good to me. I like to spend money. Are you allowed to disclose any part of that visit to others?
Give me an understanding of what you're asking.
Well, in other words, if you have a client come in after that client, are you allowed to disclose to that next client what you discussed
No.
with the others?
No, and that's why everything is confidential. Yours is information that's shared in the room, and that's as far as it goes.
Are there other things you're not allowed to do besides disclose? Anything else that...
Well, there's a privacy issue, obviously. I think, today the big thing you have to worry about is again, if you're in a proximity with some people, you have to build trust, and that trust is something that's very important to us. So you have to make sure you're using good manners, good judgment in the decisions that you make, how you work with people, things of that nature. There's lots of things in the news today where people have maybe made some poor judgments and they shouldn't have.
So if you're looking for a financial planner and you go to someone that you maybe found in the phone book,
Okay.
Your interview is important.
Yes, very important. And we'd recommend you look at more than one, and then talk to maybe some others that you know that has a referral that you might consider as well.
Personality, I imagine.
Personality is huge. Philosophy is very important. Experience is very important. I mean, I always looked at someone as someone who they could trust, as someone who has that experience before them, to give them that guidance. So that becomes a big factor in making decisions as to what's appropriate.
You really seem to enjoy this. What is it that gives you greatest pleasure?
Helping people succeed. When you find that they're able to accomplish the goals that they had set, and you look back over a 20, 30, 35, 40-year relationship period, it's very rewarding to see that things have worked out and they can recover, or they can retire comfortably, let's say, they can travel. That whole bucket list philosophy of being able to do things that maybe they never thought they were able to do is very rewarding.
And if I have a relative who likes to put money aside but not invest it, and they're retired, and they get Social Security and they get Medicare probably, and are they missing out?
Well, again, it's a philosophy, and not sure exactly what you're alluding to, but it could be that they have cash at home, and that's not a good thing. Sometimes I think what happens is people have a tendency to save money and accumulate cash. Well, there's a certain amount that you could have at home, particularly if it's locked up in some kind of a secure place. But again, it's not something you want everybody on the street to know that you've got valuables at home, because then you become a target.
And it's not growing.
And it's not growing. But usually people that are doing that aren't worried about it not growing. They just don't want to lose anything. They're more afraid to lose than they are to gain. A lot of psychology involved in this side of the table and understanding people.
I guess so. Could you explain what an IRA is?
An IRA is a tax-deferred retirement plan. And based on, again, if you have what we call a 401k or some kind of a plan at work, could be a 403b if you're in a hospital or a school setting, then you have a retirement plan through that vehicle. Based on your income, you may also qualify to do an IRA, which is, again, two components. There's a tax-sheltered deposit, so that means it reduces your taxes in a traditional IRA, or it's an after-tax contribution in a Roth IRA. The value of a Roth IRA is you've already paid the tax, but all the growth on that money in the future is tax-free. So for young people, many times they're in a low tax bracket because they aren't making that much money. They start to put money away in a Roth and have that compound for 20 or 30 years. Makes a huge difference.
And IRAs are controlled by the government, meaning that you have to, at some point in your life, take money out of the IRA?
Well, they don't control the investment. All they do is control when it's subject to tax. So what the IRS is looking for is a revenue stream. So at 70 and a half, whether you need to take money out or not, is when the government says, here's a schedule of a percentage of how much you must take out every year, pay tax, then do whatever you want with that money, whether you reinvest it or spend it or whatever.
I'm all for spending. Thank you, Ted, for coming and to help us understand financial planning and the importance of it for just about everyone. We realize that it is important for people to know that financial planning is there. I'm Ardith Keck, your host, and we're here for Forum 360 with a global outlook and a local view.
Forum 360 is brought to you by John S. and James L. Knight Foundation, the Akron Community Foundation, Hudson Community Television, the Rubber City Radio Group, Shaw Jewish Community Center of Akron, Blue Green, Electric Impulse Communications, and Forum 360 supporters.